There are certain types of homes that you really should avoid, no matter how good the deal looks on paper, because they could end up coming with serious headaches, unexpected costs, and long-term regrets. Let's go ahead and break down the top 5 types of homes that you seriously should think twice about buying. First up, the cheapest home in the best neighborhood. Seems like a good deal, right? I mean, you're getting a home in a great neighborhood. No, the best neighborhood. And you're getting it at a great discount. I mean, what more could you ask for? Here's the problem with that. If you're getting a home in a really nice, no, the best neighborhood, maybe not 100% of the time, but usually there's going to be a reason why that house was priced just so out of the norm for that neighborhood.
Can anybody tell me what's wrong with this picture?
I don't even know how many times I've seen a house where it's either just outdated or neglected or just it needs some serious updates or repairs to just fit in with the rest of the neighborhood. If you are going to consider this type of a house, yes, you are probably getting a great deal up front on the sales price, but just know that going into it, that house is likely to end up needing some help, needing some work, and depending on just how much of a discount you are getting on that sales price, it could end up being a lot of work. Hey, real quick, if this is your first time here, my name's Jose and I am your SoCal Realtor. If you are thinking about buying or selling a home, don't hesitate to reach out. My team and I, we have helped many people just like you, and we're here and ready to help you with your next move too. But enough about that. Let's go ahead and get back to the rest of the video. Next are homes that are in high traffic or noisy areas. When you have a house that's right up against the freeway or it's next to the airport or railroad tracks or even a busy intersection, it's not uncommon to see the sales price be a little bit lower. But that discounted sales price, it does come with a cost. From what I tend to see, homes that are in these types of locations, they end up staying on the market just a little bit longer. I mean, they can be a little harder to sell because not everyone's able to overlook everything that comes with that location. Yeah, if the house sits too close to one of those things, whether it's freeways, airports, railroad tracks, whatever, but it could get kind of loud and frustrating to listen to that noise, whether, maybe you're in the backyard trying to enjoy a family barbecue, or maybe you're just trying to sleep at night. What I would do is I would take advantage of today's technology. I would go online, look at things like Google Maps or whatever. I would go online and look around the area, see what's around that house. Because listen, even if you tell me, Jose, don't worry about it. It's not that big a deal for me. It could be when the day comes, whenever that is, and for whatever reason, but when the day comes that you decide we're going to go ahead and pack up, we're going to move, we're going to sell that house, it could end up becoming a problem at that point and end up hurting your resale value. Number 3 is homes that have structural issues. This one should be pretty obvious, right? You'd be surprised just how many times people fall victim to houses that have cosmetic fixes that hide or maybe temporarily fix some serious problems. When you're at the house and you're looking at it, try to keep an eye out for things like maybe cracks in the foundation or sloped floors. Actually, crazy how many times I've been to a home that has that issue. Also, doors or windows that tend to stick. Not always necessarily a sign of something serious, but it definitely is something to be aware of. Or signs of water intrusion in the ceiling. Yeah, that one obviously could be signs of roof issues. These are all red flags that, well, not necessarily 100% of the time, but they could be an indicator of deeper, more serious problems with the house that could very quickly add up into the tens of thousands of dollars to repairs. And depending on the extent of these issues with the house, it is possible that your lender could end up deeming that house to not be financeable, meaning they're not going to be able to loan you the money to purchase that house. Actually, let me stop myself there because, while yes, if a lender does say that house is not financeable, what that means is they're not going to be able to loan you the money through a traditional mortgage. But there are other options. There's the rehab loan, which will still allow you to buy the house and take care of those problems. But unless you're ready to take on all that comes with that house, the repairs, the rehab loan, because listen, the rehab loans, while they're great, they do have requirements. They have time frames that you're required to meet. I mean, unless you're ready to take all that on, I don't know. I'd probably avoid that house. Quick question, have you ever looked at a house that had any of these issues and you said, that's okay, not for me? Or maybe you did end up going forward with purchasing that house and had to deal with the aftermath. If you can do me a favor, Let us know in the comments below how everything went. I'd love to hear from you. Number 4 are homes that are in high flood zone or high wildfire risk areas. Yeah, here in California, this one could be a big one. A lot of buyers don't realize that when you're buying a home that's in a flood zone designated area or a high wildfire risk zone area, I mean, it could, potentially anyway, but it could seriously raise your insurance rates. Or worse, maybe they don't even insure you at all, and now you have to go through the state insurance plan. Either way though, if the house is located in a high risk zone area and the insurance premiums go up or go up quite a bit, I mean, obviously that could affect your monthly budget, putting your affordability for that house in serious question. And again, like I said just a moment ago, you might say, Jose, that it's not a big deal, we could afford it, it's not gonna hurt us. Great, but whenever that day comes that you say, we're ready to make another move, let's go ahead and sell the house, it could, potentially anyway, but it could end up being an issue for other buyers. And if that happens, it could end up hurting your resale value.
Where's my money?
If you are looking at a house that you suspect, I mean, I don't know, I mean, this might be in a high risk zone area. My recommendation is talk to an insurance agent. If you give them the address for the house, they'll be able to tell you if there's any insurance concerns for that house. And then there's the fixer-uppers with no exit strategy. I get it. A lot of people love the idea of a fixer-upper home, especially when you have HGTV making it all look so easy. Here's the truth though, because if you don't go into it with a solid plan, I mean, these types of homes, they could very easily turn into money pits. Even if you have a ton of experience with how to renovate a home, you still need to be prepared with a budget of what's going to be ahead for you. And if you don't have any knowledge or experience with renovating a home, this is even more important for you. Because you're going to need an experienced and reliable contractor for the work, realistic time frames for being able to get all this done, and of course, a solid budget for all of this. What I would do is this. I would ask yourself the following questions. Do you know what the repair costs are going to be? Or at least what they should estimatedly be? If you're going to need any permits for any of the work, do you know how long that might take or how difficult it is to get that? And do you know what the finished product will be worth? Meaning if you buy a house for $450,000 and you're prepared to do some rehab on the house, you're looking at about $75,000 in rehab for that house. But when you look at the area, what are the comparables for the after rehab value for the house? Meaning what the after all the work is done, what is the after rehab value for the house? And you're only finding it to be about $500,000? Well, you might find yourself stuck in that house for a little while because you're going to end up having to wait for values to go up because once that work's done, you're $25,000 in the hole. The point is, if you don't have a good, clear answer for those 3 questions, then a rehab home, it might not be a good idea for you. Of course, if you do have any questions or if you are thinking about buying or selling a home, my contact information is below. Feel free to reach out. Otherwise, until then, we'll catch you on the next one.